Okay, so yours truly has just come back from another Gold Coast getaway. Quite enjoyable. It is not, however, about me. So, what has happened in the last week or so? It's quite incredible, actually. So, watch till the end, please.
Sydney and Melbourne rocket towards record high prices with yet another rate cut tipped for the new year. Prices in most
Okay, so all this interest rate cutting has ever done exactly opposite to what they apparently, supposedly, were planning to do is to speed up the economy, which hasn't done it. We'll see in upcoming report. And they didn't apparently, supposedly, want to get property even hotter than it is. But I will argue that the only thing going for Australian economy is the property market, which is, and they know which way their bread is buttered as far as the bankers and the government. So as much as they say they don't want to fuel property, hotter property, they, I think, exactly want to do that because nothing else seems to be firing.
house prices in most Australian cities surging. National prices average posting their first annual growth in 19 months. Sydney home prices have posted their biggest monthly gain in more than 3 decades. So while 3 interest rate cuts have failed to kickstart the economy, they've sure lit a fire under housing. The gains have spread to Perth for the first time. Sydney and Melbourne continue to outperform. Darwin is the only city still going backwards. If you already own, hold on to your hats. Prices are set to continue to rise,
Prices are set to continue to rise. Who says who?
especially if you look at this chart. Even though rates are at record lows, building approvals are still sliding. So supply will continue to tighten and affordability will remain a key issue.
Okay, so from this chart, we see that obviously we know that the standard variable mortgage rate has been dropping, the yellow line, so the interest rates are dropping, but the building approvals have obviously been very high, and they've really just you could say tanked. So the theory is that there's not going to be enough supply, or there'll be shortage of supply, and then combined with the interest rates dropping, will bring the prices up once again. I think that property is exactly the asset class that should not and must not be pumped, because I think property has tendency to go up as the population grows of the world, in most parts of the world anyway, on average. There's more demand for housing. So the last thing you want to do is fuel speculation, which is exactly what the government and the banks are doing. It is one of those things, when you're buying a house. So trying to explain this tendency for the house prices to go up. When you're buying a house in whatever suburb, let's say, there will be a house and a unit and many different dwellings in that suburb. So you think, all right, there's enough choice, but it is not like they're commodities. It's not like they're exactly the same. There'll be completely different build, different size backyards and lots, different types, different condition, architecture. So you are very hard pressed to see or find something that you actually want. Once you find that something or some dwelling, a house that you want to buy, you want to make sure you get your hands on it, because the next time something like that comes up and is within your budget and is exactly what you're looking for in the location and ticks all the boxes, it may be a while. So you tend to want to overpay and get your hands on it as opposed to someone else. Unlike, let's talk stock market. So if we talk stock market, think about any big blue chip stock, like any of the big four banks, like Commonwealth Bank and Telstra. They're very good examples. So if you think the Commonwealth Bank's going to go up, Telstra is going to go up, you just go and buy shares. All you have to do is open up a online brokerage account with any of the banks. The fees are slightly different, sure, but you are buying a stock of Telstra. There are different. I'm sure somebody's going to say there's very different, but we're talking about the common share stock that you can buy of Telstra. Nothing fancy. You just go and buy it. All you have to do is pick what company you want to buy, and then you just buy it at market, and you know what the market price is. You know what it's being sold for, minute by minute, second by second. In a house, it's all about guessing and the future And once again, what is it? Oh, it's a sought after property. It's close to the station. It's got this, it's got that. No property is the same, is my point, where the share, the stocks, the bonds, whatever you're buying is exactly the same. It, no matter what broker you buy from, you'll pay exactly that price for Australian dollars that we know what they're worth. And so there's no guessing. So it makes it much easier and less likely to be speculated on. So what's going on at the moment is completely irresponsible. Government know that cutting these interest rates, and Reserve Bank obviously, because they're the ones cutting it at the moment, 0.75% is a cash rate. Cutting it is just going to put fuel on fire for the housing in Australia. Housing is a complete guessing game, is an absolute speculation guessing game, which is why, again, investment in housing, in my opinion, shouldn't be encouraged through unfair advantages like capital gains tax in property can be offset for, or the income or loss can be offset from your normal uh, income from your job, which is the only asset class that can do that, as far as I know. Everything else has to be offset against that particular class. So making this easier for people to speculate is just uncalled for. That's exactly what's going on now, and I feel actually sorry for people, first home buyers who are trying to get into the market, and the FOMO, fear of missing out, is absolutely in the market at the moment. And everyone who thinks and says they know what's going on, I don't know how some of these analysts can say things with a straight face. Oh, we expect that next year it'll be, expect by what? By our data? What data? What tells you? They never explain it. There are YouTube channels, um, like digital finance analytics that actually go into the data, dig into it, and then explain why the conclusion is what it is. On these sort of interviews, it's just honestly, when I was going through some of the content while I was in Gold Coast, I make a note in the Google Keep. I just use Google Keep. And I put the date of the Monday, 2nd of December 2019, that I need to kind of present to you and talk about it. And I normally put a little note what it's about, and I just said property garbage. It's just more property garbage. I mean, I don't know. Once again, these people get paid to talk about this. Me, it's a hobby on this YouTube channel, yet they just talk about it and they'll talk about it forever. No substantial, we think that. You'll see. I'll give you snippets of this interview. People have asked and said, look, I want to hear the whole interview. And I will try to find an archive link that will stay for a lot longer as opposed to being wiped tomorrow. Today is Sunday, 8th of December 2019. So I think tomorrow this particular clip and this link will be taken down, but I'll try and find the one that works. So I'll put it in the description so you can watch the whole interview. In the meantime, just some of the things with what certainty they're saying, and it just doesn't make sense. You just watch the language. Our research shows we've got it down as property, and just absolute certainty, as if it's a certainty, which it absolutely isn't.
Louis Christopher, is there anything that will stop this almost galloping house price situation?
Well, not in the immediate future, at least. We're not seeing the regulators stepping in anytime soon. If anything, things could accelerate if we were to see another rate cut. So, yes, our forecast for next year, the prediction is for very strong price rises. For Sydney, we've got it down as 10 to 14% price rises, and Melbourne 11 to 15%. Less so the other cities, but certainly Sydney and Melbourne. By the way, if we're looking at the current indicators, it's going to be a very, very strong year.
It's going to be a very, very strong year. They're forecasting, they're predicting. He didn't say anything behind it. He did say that it's very unlikely for regulators to step in. And I think he might have mentioned the interest rates. If he hasn't, I'll help him. I'll say they'll cut interest rates more. So between Sydney and Melbourne, we're talking about from about 10, 11% to about 15% rise in the prices in 1 year, next year, 2020. I'm sure we'll be coming back to this video and referring to it for one reason or the other. Once again, I don't blame people for being sucked into this stuff because there's a lot of things being bombarded to them on the media, in the paper, and what's going on. And we are global, part of the global world. So I mean, what does that mean? That means that we can't just look at the incomes here locally and say, oh, it's 12 times the average income, which is absolutely insane. But if you allow that to be distorted by outside money, money laundering, dirty money, and legitimate big international money coming in, then the income that we are making here in Sydney and Melbourne is irrelevant. I mean, they've got money from other means, and they're just buying this supposedly beautiful weather when it's not smoky and hazy, and we have to compete with that. But we are and have become, because of that, bunch of silly speculators. Again, I'm not blaming anyone, because what else do you do? If you've got family, you want to buy a house, you have a job, you need to be reasonably close to your work, you have to buy something. So, and it seems that if you don't buy this month, next month it'll be more expensive, because the prices seem to be bouncing at the fastest rate ever, or in the last 16 or 20 years. It's just ridiculous bounce. But I think that's exactly it. I still stand behind the dead cat bounce assumption, not assumption, but theory, unless it exceeds the June, July 2017 peaks in charting technical terms. I think so. Unless it exceeds those prices, this is just a bull trap. But listen to the language as far as the speculation. It's good for this, it's not good for that. What do we do?
It's good for those that are in the market, but for those who aren't and have been trying to get in, is it? I mean, we've been talking about affordability for quite some years now. Is it now a crisis?
I mean, again, what do we do? Why does it have to be such a big thing? One of the necessities. I mean, think about the housing as one of the necessities. So is the food and water. Now, imagine if food and water was speculated on as much as housing is, which is again one of the necessities, and you went into the supermarket and you were bidding the prices up because it just continued to go up. You think, oh yeah, but that's different. Why is it different? Food is finite resource. There's only so much of it that gets harvested and brought to the supermarkets, or you do it yourself if you're lucky. Where same with the housing. Oh, there's only so much room. Yes, there is, but there's plenty in Australia. I mean, hello. So that argument just doesn't work. It should not be speculated upon as it is, but the government is encouraging it, and Reserve Bank, and it's the only game in town at the moment in Australia. We just dig out the dirt and export it to China, and we just present this beautiful kind of sunny land with beaches. And have mostly Chinese just scoop it up and buy it, which is fair enough, but do not encourage it. Do not give unfair advantage to the housing investment class as opposed to the share market or anything else you want to invest in.
And so if prices keep rising, then we'll see more and more younger Australians priced out, particularly.
In Sydney at the moment, rents are actually falling on our numbers by about 4% per annum. That is because we actually had a supply side surge of rental properties between 2015 through to 2018.
So the going back to the investment and property being the investment, so you buy something for an investment and it's returning less money. So return on investment is less, and it was already very slim. Yet people are flocking in to buy more of that, which gives you less because the prices are going up. This is such a, I hate to use that term because it gets used a lot, such a bubble that is unbelievable how long it's gone for. And again, my prediction, our research says that in January 2020, which is just another month away, we'll start to see cracks. That's just my bold prediction, and I stick with it. It may take a month or two for it to manifest, but we'll see the difference then. What am I basing it on? Gut feeling, just like these people, almost as much of a gut feeling, I guess, as it is for me. But let's not forget they're the full-time professionals, supposedly knowing what and how and having research in numbers, which they do a lot more than me. And while I say listen less to them, I will, like I said, find a link of this full interview so you can watch it and see the language and what they're basing it on when you realize that really they're only looking at the momentum, what's going on now, and predicting it, assuming that it's going to continue to do what it's doing or has been doing in the last quarter. So it's been going up last quarter. That means, therefore, 2020 is looking like another 10, 11, up to 15% for Sydney and Melbourne price rises.